Trading has closed on May 3rd, 2023. As always, we'll start with our disclaimer, go over our calls, and then make some predictions. It's my trading plan for tomorrow, which is May 4th, 2023. Please remember I can be completely wrong. Trade at your own risk. Look for the pattern with the early low, which is this. Tomorrow should have the early high. I said I really wasn't very good at predicting what would happen on FOMC announcement days. You can see these typical wild swings. I don't have any way to predict that, and I said so. I did have a few targets. We said ultimately 4108.77 would print, and that printed. I had a higher target. I said it was at least equal to 4126.57, and we traded at 4148.30, but I said the target could change, and I couldn't give the new target without more information. We can now say that this high becomes the target. So we have a target of 4148.31. I'm calling it a failed target because the pattern was from yesterday's trade, but this just doesn't happen very often. So whether it's failed or not, I can't say, but that's the target, whether you want to say it. If we print it tomorrow and it's within, you can argue it's within its preferred time frame or argue it's not. I'm going to say it's not. And since I'm calling it a failed target, if it doesn't print tomorrow, I won't cry any tears. Now we got the typical Fed whipsaw, FOMC whipsaw. The announcement was made at 41:32:33. First move was down. The first move telegraphs what the market's going to do eventually. So you knew from the first move we were going to trade lower. That was the next big move. But it doesn't stop a detour first. And typically you get whipsaw. That was the first leg. The next leg was up and it was larger. And the last leg was down and that was larger still. And that completes the pattern, although still it says you're going to trade lower at some point. And we certainly did. And the question is that enough? Usually it's not. Now, during the day, we had this drop. MEJT said optionally about 95% of the time we'd see 41:32.69, which is over here, and we did. In the afternoon, we got a buy signal and an ultimate buy signal. Those have been satisfied. MEJT said this drop wouldn't stick, and that's been satisfied too. One other thing that's been satisfied after hours was the target of this pattern. We had a reversal bar on the daily chart involving the upper Bollinger Band when that band's flat. One of my rules is that calls for a challenge of the lower Bollinger Band. We closed around 40.90.75. Futures traded more than 31 handles under this close. The lower band is at 4,061. So in the futures market, we hit the target. Usually, when you have a big drop like this, and then you go the next day and stay within the range, Larry Williams says it's pretty much a given you're going to rally the next day. Until the last few minutes, we did stay within the range. And I don't trust moves which happen in the last few minutes of the day. So it would have been a clearer picture had we stayed within the range, but I'm not certain this last move outside of the range counts. For one thing, on the 15-minute chart, you've got big divergence in MACD, and you've got big divergence in RSI. So we hit the target, we have divergence, Here's one wave count, but it's not the only wave count. We're calling this B. But that doesn't have to be B. This could be B ending here, or this could be A of B. And if that's B or A of B, and that's 100%, this leg is right at the 78.6, and it stops within the fourth wave of lesser degree. So it doesn't break any rules if B ends here, or A of B ends here. At least it's a candidate. And if you look at the last leg down, you can count it as A, ABC with C equal to A, and C is equal to 0.618 times A. So all these fibs work if we stop here. Now here's a 2-minute chart. It's not too hard to count this as an ending diagonal triangle, but you have us going up first thing tomorrow. Or at least you could argue for one more dip down and then go up, but I want these fibs to hold. Doesn't mean it's the only count. Doesn't mean it's the right count. But at least if it happens, you could explain it. If you connect these lines here and just forget this spike and use this one, you dropped to the trend line but not through it, and you connect this high with this high, and this high, you drop to the trend line but not through it. So junction point of trend lines, it's strong support. You can break strong support. I mean, if we gap down here tomorrow, bombs away. But dropping to it but not through it really needs to break through, because when you drop to a trend line but not through it, either you gap under the line or the line wins. And breaking under it in futures doesn't count. In fact, breaking under it by so much in futures would be a killer for anyone short if this held and we gapped up. Not saying it will, but if we gap up tomorrow, not impossible, all these folks are going to be trapped. Now tomorrow's pattern has a really high. We could still gap down. Typically it's a rally day with a high in the final hour. Failure is a straight line drop. Tuesday's collapse was followed by a day and a half of trading within the range of the drop. Had we closed within that range today, it would have been a failure of follow-through and should have led to a rally tomorrow. The question becomes, was this pattern invalidated by the late undercutting of Tuesday's low? We dropped the support without going through it, hit the target of the pattern in futures, and have a wave count compatible with a short-term low. Bears need to gap under today's low to keep the decline going. Now, futures are much lower as I write this, so it's certainly possible. I'm not calling a low. I'm just saying if we gap up, we have a good low. I'm not saying we are going to gap up. And I can't rule out gapping up and rallying tomorrow, even though I believe much lower prices are coming. Now, we gapped up, hit a higher high, and closed under those highs. It's negative unless invalidated by gapping and promptly overtaking today's high. So if, underline the word if, we gap up strongly tomorrow, would trap overnight sellers and make overtaking today's high the target, which is the same target as the MEJT target. Now, trying to catch bottoms is pretty dangerous stuff, but the whole timing of this drop makes it very suspicious. It doesn't mean it's not real. We could keep dropping. But if it's invalidated, if we gap up tomorrow, we could overtake this high. And that we're not going to know until tomorrow's open. Tomorrow has the early high. Typically it's a rally day. Failure is a straight line drop. Bears look out if we gap up. And that's today's call.